Hello, everyone. Good morning, good afternoon, and good evening. Thank you for joining today's webinar on banking for water resilience, organized by the Water Resilience for Economic Resilience Initiative. I'm Alex Moroner, and I'm the Chief Operating Officer at the Alliance for Global Water Adaptation. I'll be brief to kick off today's session by giving you a little more background on the group behind it. My colleague John Matthews will frame the issues afterwards to be covered in the keynotes and the panel. Then we'll hear from Dr. Nathaniel Matthews and Dr. Ignacio Atonce about two very different institutions facing climate change in their lending. After that, we'll bring in Lila Davies of the OECD and Tom Pinella, formerly of the ADB, to join in a panel discussion where we explore the issues more deeply. Now, I'm here on behalf of the Water Resilience for Economic Resilience Initiative, which is made up of individuals from wide-ranging institutions representing the financial sector, NGOs, government ministries, and much more. We've had strong core support from the Dutch, German, and Spanish government, as well as the World Bank, ADB, OECD, and others. We've been collaborating on these issues for over 2 years, working to ensure that financial and economic institutions can manage and invest in building resilient economies that will endure and thrive amid a shifting climate. Now, as you'll see on the slide, earlier this year we released a flagship report that goes into great depth on the varying challenges and solutions that are being explored at the intersection of climate, water, and economic development. You can use the Linktree link to find the report, as well as videos from past events and a great deal more. Now I'll go ahead and turn it over to John Matthews, Executive Director of the Alliance for Global Water Adaptation, to set the scene for today's topic. John, the floor is yours.
This idea that there are systemic vulnerabilities and sensitivities is new, I think, in our conception of the banking system itself. We're starting to see the risks, and we can probably start to make adjustments in how we think about regulatory systems, the way that individual banks think about their own operations, their services, how they conduct foresight analyses. But I think, and we'll cover all of these topics today in this session. But what I think also we should be mindful of are two other points. The first one is that is there a way that we can transition from just defining resilience as a reduction or an amelioration of risk itself, or can we think about resilience in a more positive, enabling, more comprehensive way, something that banks can provision more broadly across the larger economy? And this idea is somewhat revolutionary, and it's something that we're starting to see in other parts of the financial system as well. Certainly, insurance is starting to see itself in this provisioning resilience, this kind of additive component to thinking about resilience. Where I think we're starting to see some of the innovation, again, you'll see this in the talk today, is less in the formal banking system and more in the shadow banking system. If you're not familiar with the term, the shadow banking system is at least as large in terms of assets and scope as the formal banking system. But the shadow banking system is the use typically by companies, but sometimes by governments as well, to provide banking services through alternative types of institutions, non-banks, essentially. My retirement plan, for instance, here in the US, is an example of the shadow banking system. And the shift of innovation, I think, in seeing resilience and how we take really centuries of experience in how banks and banking services can provision wealth, they can enable prosperity, that they need to be extended to new groups and to new situations and problems that are relevant to or adjacent to or impacted by climate change is a very exciting innovation. And we'll hear a talk in that space as well. I'd like to leave you with a second kind of insight, which is how do we need to think about systemic solutions, not just systemic risks? And here I'd like to provoke with maybe two elements. One is if you can listen for in the talks and in the panel about how we might be able to leverage the power of water in really through two mechanisms. One is using water as a mechanism for coherence, as a kind of currency that extends across sectors and in institutions as a shared resource, often an invisible and limited resource. Are we able to make use of banking services that can see into that space? An example of this actually would be a group like water.org, which is an NGO, works on rural water and sanitation services, but is a fantastic example of the shadow banking system and providing microloans to individuals in middle and lower income countries to bring on water and sanitation services at a household level through loan systems. It's a very impressive pattern that they funded something like 5 billion US over the last 25 years or so. And second, can we think of water potentially as a medium for resilience itself? So we're not used to thinking of the banking system, formal or shadow, as this kind of medium for resilience, much less as making water management decisions. But I would argue that that actually is the transition that we need to be going through right now. That's a point that we make in our report, and I hope that it's an element and a theme that comes out of the speakers and the panel today. With that, I would like to hand over to our first speaker. Despite his last name, he is no relation as far as I'm aware. Dr. Nate Matthews is, however, a good friend. He's the Chief Executive Officer for Planetary X, an organization dedicated to enhancing biodiversity conservation through innovative technology and building collaborations between the private sector, policymakers, local communities, and indigenous groups. Previously, he served as CEO of the Global Resilience Partnership. Nate has over 20 years of experience identifying, managing, and scaling hundreds of resilience and adaptation projects and programs in partnership with governments, NGOs, communities, and the private sector across more than 30 countries. He holds a PhD in geography and is visiting professor at King's College London. Thank you very much. The floor is yours, Nate.
Thanks so much, John, for the introduction, and I'm really pleased to be here. And actually, I don't have any slides, just to give everybody a bit of a warning. So I'm afraid you're stuck looking at me, or you can cover your screen or something while I talk for the next about 10 minutes. But yeah, I'm really pleased to be here because, if I was thinking back 5 years ago, I would never imagine myself being in this space and really working in decentralized finance and using, a lot of what are essentially Web3 technologies to try to advance resilience and to try to be disruptive at a time where I think many of us are itching for impact at speed and scale. And I think, we're all aware of all this sort of what's going on across the climate and the need for rapid change. And I'm certainly not a technocrat, but I do believe that there are, especially now having delved into it over about the last year and a half, and of course very intensively with my new role with Planetary X, that there are a lot of really exciting opportunities out there within the new technology. So first, I just wanted to start out with a couple definitions. So I mentioned Web3, and so that's really referring to the next generation of the internet, where all of users have greater control and ownership over data. We're talking about more digital assets and online interactions through decentralized technologies. And this may be like blockchain, cryptocurrencies, smart contracts, etc. But the idea with Web3 is that it's just a more open, user-centric web where power is distributed instead of centralized in large tech companies or platforms. So that's a sort of shift that, many people are hoping for. And then you'll hear me, and then I'm going to base a lot of my talk this morning on decentralized finance, and I'll just call it DeFi to make it a bit of less of a mouthful. And so that's referring to a financial system built on blockchain technology that operates without intermediaries like banks, and it offers services such as lending, borrowing, trading through decentralized protocols. And this enables transparency, accessibility, and control by users. So what I'd like to do is talk just as I say, it's going to be about 10 minutes or so. I'm going to talk through a little bit about the innovative ways that decentralized finance or DeFi can enhance resilience as I see it. And then I'll talk a little bit about what we're doing within Planetary X as utilizing these technologies and these protocols and approaches to do just that. And then I think we'll get into some of the juicier questions and touch on where this isn't working or where people are ignoring some of the key risks, as you pointed out, John, in the question and answer. Look to join the other panelists there. So first, from a DeFi perspective, there are sort of some really key examples where DeFi can help in terms of building resilience. And I think some of these will be familiar to you, but I think it's useful to go over them, one by one anyway. So the first is just really in providing this direct access to financial services for underserved communities. So many of you will be aware of the really predatory lending and high interest rates that exist, especially for smallholder farmers, unbanked, I should say, or underbanked communities. And they just don't have the ability to invest in, be it water saving, technologies that are out there that can't access loans or savings or insurance through regular banks or financial institutions. So they often go to these predatory lending places. And these, sometimes we're talking interest rates of 50% plus annually. So they're really taking advantage of the situation that these communities are in. And they're also often having to put their land up as collateral and often losing the land when, climate shocks and stresses hit. And so it's just completely eroding their resilience. And then, with your land also up as collateral, you're less likely to invest in it. And there's all these additional knock-on effects. So DeFi is really powerful here because they can really enable, for example, small-scale farmers in Africa to use platforms like Goldfinch, which is one, to obtain microloans without needing a traditional bank. So they can then use these loans to invest in drought-resistant crops, water-saving technologies, or even to recover from extreme weather events. And I think one of the key components here is the fact that this is really transparent and traceable. And that's one of the big advantages of DeFi. So the funds can be distributed directly to the communities through smart contracts. Especially in East Africa, you've got M-Pesa being exceptionally powerful here. And so there's no opportunities really for the funds to be lost to corruption or inefficiencies that occur across a traditional financial system. And the flow of funds can be tracked in real time, which is another key component here. So you're not waiting days or, maybe the loan is held up in somebody's account where it's collecting interest or things like that. So you can track it in real time to see where it is. So that transparency is really key. And it links to where DeFi can be used in insurance protocols as well, especially with parametric insurance solutions. So where claims are paid out, automatically based on data triggers. It could be a drought or a flood. But this really, to be able to enable the smart contract to enable for these payouts to happen immediately helps first to enable trust in the insurance system. And there are a lot of opportunities I think we're seeing, with like the Insurance Development Forum and others to bring trust and to look at their focus. Insurance companies are increasingly looking at resilience and resilience building as a key component of insurance. But in the past, and I would say traditionally, there has been a lack of trust in insurance, especially in its payouts and its sort of complicated bureaucracy. So these DeFi systems really do allow this immediate payout, which then helps build trust in the system, which can then help more people to be insured and protected. And sometimes within decentralized finance, we use the word of like a trustless system, which I found interesting when I came across it. And so really it's just the ability or the context refers to a system or protocol where participants don't need to trust each other, or even rely on any central authority to ensure that these transactions are carried out fairly. And so, of course, we still need trust within people, but when you're going with a blockchain system, there's no single entity that controls the system. So everything, all the transactions, agreements are validated by a distributed network of nodes. And that makes it quite powerful in terms of its decentralization. It's all completely transparent. So the ledger is all publicly available and accessible, which is really key as well. The rules are immutable. So once programmed, basically the rules governing the system, the smart contracts, can't really easily be changed or manipulated, which again brings a lot of trust. And then, of course, there's the cryptographic security, which is behind all of this. And so that's quite powerful in itself, and really brings a lot of integrity and help prevent fraud. So this kind of idea of a trustless system really just eliminates the need to rely on a single entity or person to act honestly, and just to know that the system can automatically, carry out a set of predefined rules and operations. And I think there's a couple other interesting points where DeFi can be quite powerful in terms of resilience building. So one is that communities, of course, can use these decentralized platforms to pool their own savings and earn yields. So that's, again, that might have been a challenge in terms of the past, because they wouldn't have access to the bank, and then maybe one person has to have a hold of the money, and then what happens if that person then decides to use it without consulting everyone else. So they're able to pool it within a DeFi system, which is controlled by certain rules, and then that links to the governance and decentralized decision-making power of DeFi. So a lot of these platforms incorporate decentralized governance models, where people have voting rights on how funds are allocated and where the funds should be prioritized. And I think that's really powerful, in ecosystems where you can have a token holders, people who have a part of the system, who are part of the system, can vote on, a community resilience project, could be a water saving project, deciding which initiatives receive funding based on local needs. And again, you have that transparency and traceability of the votes. So there's no opportunity really for manipulation. And then the last one, which I wanted to speak a little bit more in depth to, is just around the idea of tokenized carbon credits and what we do within Planetary X, which is a biodiversity resilience asset. So it's just really the ability of DeFi to facilitate the structure and trust of tokenized assets and drive investment into environmental projects where corporates or individuals might want to transition to a net zero or nature positive sort of approach. And so our model within Planetary X is, and one of the reasons why I was super excited about joining the organization, is really based on everything I was saying about, which is really harnessing the power of DeFi and also AI as an example of how this technology can build resilience. So our goal within Planetary X is to create financial incentives to set new, reliable, and trustworthy standards and reward nature positive stewardship of land. And so we're doing that, through biodiversity resilience assets, which are essentially the world's first high integrity asset that values biodiversity, resilience, and community. And so the asset is a stacked asset or stapled security that allows corporate buyers on net zero and nature positive transitions to offset their carbon footprint while securing additional biodiversity, resilience, and community benefits. So we do this through the asset is really encapsulating the broader value of ecosystems. So when we're talking, as John mentioned at the beginning, about really approaching this system, it's not just the singular focus on carbon. We're looking at all the essential services that biodiversity supports, including water purification, flood protection, soil fertility, erosion control, and much, much more. And our assets are designed to be long-term and avoid leakage. So by enhancing and preserving, I should say, the resilience of ecosystems against any disturbances. So it's really approaching the whole ecosystem and trying to build that up instead of, again, a singular focus. And again, moving beyond that criticism that has often happened in the carbon market of additionality, because we're looking at the restorations of whole ecosystems. So again, very much a resilience approach of approaching a system to enhance its natural functions and building the resilience of communities, indigenous groups. And this is one of the most exciting things about our assets, is that we take 75% of the funds from the assets as a starting point and bring that down to communities, indigenous groups, and landholders on the ground. And then we increase that to 90% from year 8 onwards. And we're using DeFi in terms of smart contracts to build up that trust, because we're also only charging, annually for the price of the asset as well, instead of a promise into the future of 20 years or more, as you often see with carbon credits. So you're only paying for performance delivered. I'll wrap up now here in a moment, but I just wanted to say that, I've mentioned AI as well. And I know this is much more about finance, but AI and DeFi also interact and intersect quite powerfully together, just in the ability of AI to provide real-time data for predictive insights, and in terms of its resource efficiency and monitoring. And so the technologies that, monitor biodiversity, monitor resilience, are also really evolving as a result of AI. And the power of this, I think, can lend a lot of strength to investments in resilience, because one of the challenges being able to measure resilience in context, specific, because resilience is context specific often, and also just the power of AI and DeFi to grapple with the system complexities here. And I think that's fantastic, and it gives me a lot of hope for being able to drive more investment into adaptation and resilience. So with that, I'll pass it over to Alex. Thanks.
All right. Thanks so much, Nate. I think, your last point really resonated too. Thanks for an excellent talk. Just learning more about how finance can be used in such specific context. Resilience is very context specific, and adaptation can be. So it's really encouraging to hear that there are new innovative approaches using new technologies that can reach new audiences as well. So thanks for that, and looking forward to diving in a little bit more in the panel in just a little bit. Next up, I'd like to introduce our second speaker, Dr. Ignacio Atonz Muniz. Ignacio works at the Grupo Cajamar Foundation as director of the research service, aimed at generating knowledge in the agri-food field and disseminating it through publications, reports, and open access training. Previously, he served in the Ministry of Agriculture, Fisheries, and Food, where he held various positions, including Deputy Director General of Analysis, Foresight, and Coordination, and Deputy Director General for Agriculture Policy Planning, among others. He's a civil servant of the National Corps of Agricultural Engineers and holds a PhD in agricultural engineering from the Polytechnic University of Madrid, specializing in the field of agricultural economics. The floor is yours, Ignacio.
Thank you very much for the presentation, and thank you very much for the organization to invite us, Cajamar, for this session. I'm going to share my screen. After listening, Nathan, I think this my presentation is going to be more or less like case study about an Spanish financial entity, Cajamar. We are a medium-sized entity, financial entity. We are very involved in the agri-food sector, and our origin is in the driest area of not only of Spain but in Europe. Almeria, an area that now is entirely devoted to vegetable production and the greenhouses. So I must say that I do not work, as you have said before, in the bank side, but in the research, in the unit for research, studies, and publication of Cajamar. But I work closely in relation with our direction for sustainable development. So this presentation is shared with my colleague Roberto García Torrente, that is, he's the director of this sustainable development unit in the bank. Okay, some very few figures about Cajamar. We are, I think, for us it's important to say that we are one of the 10 Spanish entities monitored directly by the single supervisory mechanisms. We have, as you can see, more than 5,000 employees, close to 1,000 sales points with close to 4 million customers, more or less half of them members of the cooperative, because Cajamar is a cooperative bank, is a union, is a group made by the union of 18 credit cooperatives in rural areas in Spain. As I have said, we are mainly devoted to the agri-food sector in Spain. In our current company's portfolio, agri-food represents a bit more than a third of our total portfolio, but in the new production, the credits from the last 12 months, agriculture is more than 43, close to 44% of our total business activity. The role of agriculture and irrigation in Spain, probably most of the people following the webinar will know that agriculture is a strategic sector for Spanish economy. The whole agri-food system represents currently close to 9% of our total gross domestic product. That's 3 points higher than in the average of the European Union, and represent more than 11% of our total employment, 1 point higher than in the European Union. Spanish agriculture is an export-oriented sector during this century. Nowadays, with the data from the last June, annual total exports of Spanish agri-food sector represents more than 72,000 million euros, with a net trade close to 8,000 million euros. And what is more important for Spain is that the agricultural exports, as you can see in the slides, are more than exactly 18.5% of total exports in the Spanish economy. So the agri-food sector is one of the few sectors providing a positive net trade to our economy in Spain and representing a great share of our total exports. And which is the use of water to get these figures. Irrigation is very important in Spain. Total irrigated area represents 23% of total agricultural area in Spain, but produces 56% of the total volume of agricultural products in Spain, representing 65% of total agricultural output. So it's not a question only of a major productivity in terms of tons per hectare, but also in terms of the value of the products that we get from the irrigated areas in comparison with the products we get from the dryland areas. Along this century, in Spain, we have decreased slightly the water used for irrigation by 13%. At the same time, the value of the crops output has increased 35%. So we can say that the economic efficiency of water used in irrigation has increased along the century more than 50%. we currently irrigated more area than at the beginning of the century, more or less 500,000 hectares more, but with a lower consumption of water. And this has been because of the change in irrigation systems. Now located drip irrigation represents more than half of the total irrigated area in Spain, 53% in Spain, while it's only 6% in the world. But not only the change in the irrigation system, but also the change in the irrigated crops and the change in the irrigation amounts per hectare that are using our farmers. And this, as you know, in a context where we have less land available per person in the world, and with a higher volatility in production because of climate change. In the slide, I have put the example of the last 10 years evolution of the Spanish production of cereals and the Spanish production of olive oil. And we consider also in this context irrigation as an stabilizing tool for the agri-food system. Okay, the next part of my presentation will be the evolution of irrigated agriculture in the southeast Spain and how we have supported it from Cajamar. How has been this evolution? As I mentioned before, our origin is located in Almeria, in the southeast corner of Spain. Almeria in the 60s was the poorest area in Spain, the poorest of the 50 provinces, the 50 regions in Spain, the driest in Europe, and Almeria is also mountainous. The goal of in our origin was to create economic development through greenhouse agriculture. Through greenhouse agriculture in an area with very scarce availability of water. The rainfall in Almeria is not only well below Spanish or European average, but also below, for example, Morocco average, and with an annual temperature higher than in the rest of Europe. The company Cajamar had our first benefices in the year 74, and in the year 75 we started our first large investment that was the research center, the research station, the experimental station in El Ejido. The picture at the left of the slide is the picture of the experimental center in the 70s, where there were no greenhouses around at all. And in a place where there was no greenhouses, we decided that we need not only a greenhouse, but some of them to research, to try, to test, to transfer knowledge to farmers. The right picture is the current picture of our experimental station with all the greenhouses in El Ejido around. The challenge in the 70s, we consider that any agricultural development will depend on the sustainable use of very scarce water resources. And then, according to that challenge, we successfully studied transfer knowledge and finance projects on areas like these areas you have in the slide. Some of them were issues of study, transfer, and finance in the 70s, like the evaluation of located irrigated facilities, or the study of the status of groundwater resources, and some of them are issues coming in the last years, like the use of microalgae for wastewater purification or the reuse of wastewater for irrigation. So it's like an evolution of our concerns about how to improve the efficiency in the use of water in agriculture in Almeria. These are some examples of these first studies about groundwater capacity, groundwater studies in the area surrounding the greenhouses area in Almeria. And this is the current picture of Almeria, the highest greenhouse area in the world, 50 years later, with more than 33,000 hectares under greenhouses. Total vegetable production in Almeria, just in the province of Almeria, is larger than in Germany or in Greece. In Portugal, is very close to the total vegetable production in France, and we have been able to produce these vegetables using less water per kilogram than the example for the case of tomato, that in other open air vegetable areas in Spain or in France, I'm very close to the same figures that you can find in Netherlands or in France under greenhouses with heating facilities. But the challenge today for Cajamar is not only to continue supporting the development of vegetable production in Almeria, but also to contribute to the sustainability of the Spanish agri-food sector in order to maintain its strategic role for Spain. We try to apply. We are now present. We have now extended our activity to the more very close to the whole of the country. We are especially located in the Mediterranean regions of Spain, but we try to apply the same approach in other agricultural sectors and regions that face different threats and deficiencies, and not only water. In the case of water, we try to continue generating knowledge and financing measures, first to increase efficiency. Especially, we find now in Spain that the efficiency must be especially increased or improved in those regions where water was not scarce in the past, and now they are facing these problems that Almeria had in the past, and not only increase efficiency, but also to support the adaptation to more variable water allotments per year. It's not a question of only of using less water per hectare, it's a question of to be able to adapt every campaign to different water availabilities because of climate change. So for us, the approach will continue being knowledge plus transfer of this knowledge, training, plus finance to those farmers that want to use this knowledge transfer in their farms. So at the end of the day, for Cajamar, we have these like two activities. One is knowledge and innovation. The second is the purely financial activities. In the case of knowledge, we have like 4 main areas: the study services, publication, reports, market reports for farmers. We have, as I mentioned, our experimental centers, Las Palmerillas, that is the center in Almeria, that next year will be their 50. It will be 50 years of the Las Palmerillas Center. We have also a second center in Valencia, in Paiporta. We have digital tools, for example, helping the farmers with fertilization or with irrigation models, irrigation management. And we have, since 4 years ago, we have and a startup incubator and a startup accelerator, Cajamar Innova, that in the first 3 years was devoted only to water startups. And in this year 2024, we have opened the call also for other agri-tech and food tech projects. Finally, we are a financial entity, so we have our financial activity also devoted to try to achieve water sustainability, financing individual farms, the investments in individual farms, financing water user associations, the investments of these water communities, financing also public infrastructures, like in the case in our area of the Trasvase del Negratín, and especially in the last years, financing investment in relation with new sources of water, like desalination, with renewable energies or regeneration. To finalize my presentation, I think we consider that water is life and water is food. We see that what in the past was a specific problem of some areas, such as Almeria, is now widespread around the world. From Cajamar, we will continue putting our financial resources and our knowledge for the care and the efficiency in the use of water. Thank you very much.
Excellent. Yep.
Okay.
Yep. Thank you very much, Ignacio. I think the approach taken by Cajamar is really encouraging and kind of approaching it from both sides, not only with the institution assessing its own risks related to climate change and water, and one of the biggest economic sectors in Spain, but also working directly with the borrowers and the farmers to make sure that they're set up for success with the types of training that you were talking about before, and in tandem with financial arrangements there. So thanks for an excellent talk, and happy to dive into it more in just a moment. Next up, I'd like to welcome back John Matthews, who will be moderating our panel segment. And John, I'll hand it over to you.
Great. Thank you so much. And thank you, Ignacio, for your talk. It was excellent. And what we've heard are really two presentations that represent both the shadow and the formal banking systems, and that explore, on one hand, how we can use the banking services, lending, saving, financial transfer systems as a way to actually bolster the most climate exposed, the most climate sensitive and vulnerable groups who have not had access to the kinds of financial services that certainly middle, even kind of lower middle class groups have had, in some cases for centuries. And then the second case, an example from the formal banking system, really being able to explore how looking at an impoverished area, that long-term economic development required a lot of new knowledge development, systemic investment in water infrastructure, in governance systems, in new knowledge as well, experimental processes, and also treating the issue around climate change as a kind of moving target, that we needed to see how the challenge of water scarcity was evolving over time. And we hope to explore all of these issues over the rest of the panel discussion. I'd like to invite the panelists to come up. Tom Piniella, Lila Davies, and I'd like to re-invite Nate and Ignacio back. And I invite the audience to prepare your own questions. I hope this is a lively discussion. I have a few questions that I'm going to start with the two new members of the panel, and then I'm going to turn it over to you in the audience. And if you don't come up with questions, I have some in my back pocket. I'm going to start with Lila, and I'll go to Tom. I believe Lila is joining us from Paris, and Tom from Bangkok. So quite a global audience here. I'm going to start with Lila, and just a brief introduction. Lila is a policy analyst with the Organization for Economic Cooperation and Development, the OECD. It's an intergovernmental think tank. She leads work on assessing the financial materiality of water-related risks. In her current role, Lila also implements national policy dialogues on water with emerging economies to support policy reforms to address pressing water challenges. Prior to working on water, if you can imagine having a life before water, Lila focused on finance and investment in clean energy at the OECD and at EY, notably leading the OECD Clean Energy Finance and Investment Mobilization program in Colombia. So welcome, Lila. Really happy to have you here. Certainly, we needed your gender diversity quite desperately at this point in the talk. I'd like to start by asking you about some of your work on the topic of financial materiality in climate change. That's very much a kind of risk-oriented approach to how we think about climate change and financial and economic systems. Can you talk a little bit about some of the connections that you've been able to discern and see emerge in your work between water risk and economic systems, and how climate change may be interacting with them? The floor is yours.
Thank you, John, and thank you very much for the invitation. I'm happy to be here. So thank you. Yes, in our work, we look at, in our work on finance at the OECD and the water team, we work on assessing the financial materiality of water-related risks. So this was really trying to understand where we stood in terms of understanding of water risk in the financial system, and how this information was being used to then price risk. And so a report that we published last year really highlighted that there was mixed to low evidence of water risk really being priced in the financial system. And that means that it was being that it was not widely being taken into consideration in financial products or in assessments of risk and the pricing of risk. So this is some of the work we've done previously, but I think maybe what's interesting to talk about here is the link, as you said, between risk and economic impacts and also the financial system. So first of all, at the OECD, we define water risk as too much, too little polluted waters and disruption to fresh water systems. And then we see, obviously, climate change is an important driver of water risk, but we also look at it through the nature lens as such. So we see urbanization and economic activities as being important drivers, which create competition for existing resources and can lead to pollution. So land use change, pollution, overexploitation of resources, these also drive risks. So we have so there's the sort of agency within that, which means that our own activities can impact on both exposure and vulnerability. So what we've been working on at the OECD is trying to strengthen the guidance that exists to central banks on understanding water-related risk as a nature-related risk. So making that link between water risks to economic impacts and then how that impacts on the financial system. So obviously economic impacts, we've seen this capital destruction, business interruptions, but also we're seeing the important role of supply chains and how water risks can really impact on economic activities through supply chains. But an important point, which is which always needs to be raised, is that economic impact does not necessarily mean financial risk or impact to the financial system. Those are really two separate elements, and it will depend on really the portfolio concentration or diversification or the strategies in place in the financial system to manage their risks. And so maybe I'll pause there, but just to say a lot of our work is also focused on, so when I said financial materiality, perhaps it's useful for me to define that because maybe not everyone is aware of the term. So financial materiality means that the risk could impact on the decision making of an investor. So you're looking at this outside risk and the impact on the firm, and that can be for corporates, so including financial institutions or non-financial corporates. But we've also it's also important to bring in this other aspect of environmental impact. How are firms impacting on the environment? How are they impacting on water? And that brings in the sort of ownership over some of the risks that are created. And so addressing these together is often referred to as double materiality, and that kind of recognizes the duality between those two. And so just a final point there is that the issue with assessing risks is that often it's a matter of judgment and assessment, and so that links back to why these risks are not always being taken into consideration in the financial system, because it really depends on how they're being measured, if they're being measured, and what these corporates or financial institutions are looking at. So a lot of new developments have happened on disclosure at the moment, and I'll maybe pause there, but these are really important, I would say, for how we understand and how we standardize our approach to looking at risk, and then take it into consideration in risk management strategies.
That's great, Lila. And I'd like to just start off by saying that I actually have a tattoo that says financial materiality that I'm not showing at the moment. So some of us do maybe use the term more regularly, maybe in some awkward ways. But I appreciate you defining it for people who maybe don't use the term as often. And I think what you're saying is also really important, that we need to we often think about the financial system, we need to think about the economic system, but also the water system, and where water is embedded in both of those systems, and especially for water, you mentioned that water is really also an expression deeply tied to the landscape, and maybe how we're thinking about natural resource management more generally. And I really like too that there's the distinction you made between that something could have an economic impact without necessarily having an impact on the financial system as a whole. And it seems like, in a sense, what we want to be able to do is use the concept of financial materiality as a way to ensure that that's the case, that we may see economic impacts that hopefully are minimized, but that they don't stress, break down, or disable the financial system itself when they occur. So very, very helpful there. I'm going to, I note that there are a couple of questions. I'll turn to those after I give our second new panelist a chance to speak. I'm going to turn to you, Tom. Tom is Dr. Thomas Pennell is the chair of the steering committee for the Action Platform for Source-to-Sea Management. He previously served as the Asian Development Bank's Director of Environment, Natural Resources, and Agriculture Division, East Asia Department, and chair of its Water Sector Group in committee until earlier this year. He's played a range of senior roles at the Asian Development Bank since his start there in 2003, and has been responsible for water sector policy, knowledge and innovation, and portfolio enhancement. Prior to ADB, he was a water resources management specialist at the World Bank. So again, a very different type of institution that we're hearing from in terms of his experience. And Tom, my question for you is really about financial institutions more broadly, and how they're thinking about the range of issues that we've tried to present here. So to set the scene, I think even in the speakers, we've seen like a really clear example that banking services are occurring over a huge range of scales, from microloans to multilateral lending to even national banking institutions. Does it feel like certain types of financial institutions are particularly eager, or maybe more hesitant, to re-examine their business practices in light of some of these emerging climate and water-related risks right now?
Yeah, thanks, John. It's a pleasure to be here on the panel and speak about it. As you mentioned, my experience has primarily been with Asian Development Bank, so I'm going to speak to it from a development bank type of perspective, which is not a commercial bank. And like the World Bank, these are institutions owned by governments, lending to governments for a range of activities. So I would say that all of the international financing institutions and the multilateral development banks are really highlighting climate in their portfolio, which is coming from the shareholders. And this is both on the mitigation, but also on the resilience side. And so we do see a massive change in how we're looking at climate and climate lending and climate. All of the development banks have climate finance targets, that is, i.e. the money lent, how much is related to climate, either adaptation or mitigation, and the targets are quite ambitious. So, it's our job, or was my job, sorry, to work with clients who are borrowing countries, developing countries, to work with them on how to improve their resilience on the water side, as well as also on the mitigation side. And so you saw a range of activities in terms of just basic lending that, let's say for irrigation modernization, we heard a lot about that from Ignacio, to improve the ability to withstand drought and flood, to adapt cropping systems from a climate perspective. There's a lot of diagnostic work that's being financed with concessional and grant financing to help countries get a better understanding of what their risks are and then make sovereign investments. Ideally, that work then leads into the countries themselves, as well as support from development institutions to make investments. There is policy-based lending, where a financial institution, a development bank, will come up with a matrix of policy actions that can be either mitigation or resilience oriented, that governments must undertake to improve their resilience, and then will be borrowing money in return for making those policy adjustments. Also, the multilateral development banks can serve as a conduit for concessional finance from places like the Green Climate Fund, and those projects can address both the water supply sanitation in terms of, let's say, making your water intakes more resilient in over a longer time horizon on how you're going to get your water supply, but can also be things such as adaptive agriculture or even pasture land management, which for herders in Mongolia, for instance, that received GCF financing that had both mitigation and adaptation impacts. And I also just wanted to highlight the point made by Lila too, that not only with adaptation and resilience, there's also a big resurgence of nature coming back into the portfolios of the multilateral development banks, and a big emphasis on this. And I think before long, we will see these institutions held accountable for how much they're lending for nature, just the same way they're lending for climate. And one of the nexus there is nature-based solutions, which are both climate and nature oriented. So you're seeing a big emphasis on this. Now, just one final point, sorry. Well, you see this emphasis coming strongly from the institutions, the lending institutions. I think a lot of capacity development and upstream work has to be done for the client countries, because often some of these solutions are more expensive. They may not be fully appreciated by countries that have lesser capacity. And at the end of the day, those countries are borrowing the money. It's their money. So you can't really force them to say, hey, this makes sense for you to borrow, because in the long term, this is a much more resilient solution. So ideally, it's the capacity and the upstream work to get the client countries to start demanding these projects and working with these financial institutions for these more resilient solutions. Overall, I'll leave it at that. Thanks.
That's great, Tom. Very interesting intervention, talking about how we really need a full spectrum of banking type institutions to be able to offer these kinds of services. And also that we're seeing a proliferation of some new categories of institutions, like the Green Climate Fund, that are starting to enter into this space. But also recognizing that it's not just on the supply side. Actually, we need to think very much about both demand and capacity to be able to manage and make sure that we're actually meeting needs for national and subnational levels for banking services. I'm going to combine a couple of the questions that seem to lump together to me. One of them is a question about, are there certain regions of the world that we should be more concerned about in terms of how we use banking for resilience, or at least kind of climate de-risking? Is there a regional component? And then a related question, I think, is actually around the topic of renewable energy. That does that have potentially the opportunity to be able to enhance banking for water resilience? So maybe it's actually providing more security, more stability in the system. What role does the banking system play in that aspect? Is there a volunteer who might be interested in either of those? Don't make me pick.
I can perhaps jump in on the renewable question.
That'd be great, Lila. Thank you.
That's a really interesting question. Obviously, there's a great link between renewable energy and water. I mean, just renewable energy and off-grid water solutions, like that's one thing that comes to mind as being really, really important, having lots of potential. But also in terms of stranded assets, oil and gas, I think we're amongst some of the assets that were most at risk from water-related risks. So by diversifying into renewable energies, we're also removing some of the risk linked to conventional fossil fuel energies. So that's one thing that comes to mind as being quite powerful in terms of link between renewable energy and banking for water resilience.
Great, and maybe this is also a topic. You mentioned stranded assets. Maybe it's also an issue where maybe we have kind of older infrastructure, maybe that's in the 50 years or older. Certainly in North America, some place like the Hoover Dam would be a really good example of that, as a massive hydropower facility that is essentially now stranded because of climate impacts and having reduced renewable energy generation. Also the Kariba Dam on the Zambezi. There's impacts have been reported on the Niger and West Africa in the Mekong that are similarly rated. So, but I think you bringing up the topic of oil and gas too, trying to think more broadly, not necessarily renewables, but the kind of energy grid itself may be stressed, and maybe the need for a kind of target for investment in that regard. I'll also note, I see that Kabishanga, that your hand is raised. If you could type your question into the Q&A, I'd be very grateful to relay your question. I'm gonna have a question from friend and colleague Maheen Malik. She's probably coming from Pakistan, and she is talking about she's with the Alliance for Water Stewardship. Is there a role that and I think this is a good question maybe for Ignacio, for being able to use standards such as are promoted by the Alliance for Water Stewardship or other kinds of water stewardship related groups as a way to help evaluate the kind of progress, to evaluate the success of your investments, your lending practices, and so on. Partial answers are useful too. So if you think that maybe they're not there, or they need to be extended, or they're already like a solid answer, that would also be really helpful to hear your reflections.
Yes, thank you for the question. We consider this is one of the great challenges and one of the great issues for the now and for the coming years. We have standards for other ways to approach the study of operation of investments in the financial area, but we are now developing this instrument, these standards for sustainability, for water, for emissions, and so on. The question for us is how to manage the burden cost for farmers, for companies, even for us, for the banks, how to fit any standard to the different situation of the investment projects of the farms and so on. But obviously we need to go in this in this area. We need to apply this kind of standards to not only to select our investments, but also to monitor the evolution of our assets, of our portfolio. But it's a big issue. I think that many people are working on the issue, and it will need to be developed very quickly in the coming years.
Excellent answer. It feels like we need an all hands on deck approach right now, that we need to actually bring in new sources of knowledge, new bodies of knowledge, and reorganize them, mobilize that information more broadly across the financial and economic systems. I have a question that I think for you, Nate. You talked very much about DeFi, decentralized finance systems, as a kind of core to the way that Planetary X is evolving. And we have a question from Janae in regard to Central Asia, that this is a region where there's a lot of tension around scarce water resources, and in effect, if I can read between the lines in the question, there's been a kind of hyper-centralized approach that has been taken in, and how there's investment around water resources. And is that something that you see your work with Planetary X as something that is trying to counterbalance, or should they work together? Or how do you see this kind of tension between very decentralized and very centralized approaches to banking, investment, and financial services?
Yeah, thanks. It's a good question. I think there are, cases where maybe a centralized approach is perhaps more effective, and where a decentralized approach is also more effective. I mean, I think one of the challenges, one of the advantages of the decentralized approach is really allowing decentralized governance to have a role, but also that complete transparency and a tamper-proof or immutable process in place. In some places that may be a threat to existing systems as well, because they've evolved around a system where a lack of transparency benefits very powerful people. And I'm not saying that's necessarily the case with Central Asia. It could apply to any country. And so I think, decentralized finance does pose, a challenge to existing systems. And but it can be quite powerful in I guess, enabling different modalities, especially in terms of getting financing for smaller projects or enabling a wider governance system. I guess I would also just to jump in on the point on standards and pick up some of what Lila said as well, which I thought was great. And Ignacio I was just thinking, more about the sort of miscalculations of climate risk by the finance industry in general. And I think we've seen this time and time again, and it seems it's a bit uncomfortable for me to even talk about it because I'm certainly not an economist. But as someone who's working across climate risk and climate change, you've seen so many big banks, JP Morgan, Chase, Citigroup, Barclays, etc., just facing big criticism for mispricing even medium-term risks across their investments. And it almost kind of feels like you're looking at some of these banks and financial institutions as sort of ostriches with their heads stuck in the sand. And I think the worry is that when they've engaged with the scientific literature, they've said, okay, that's what the predictions are at 1.5 or 2 degrees of warming, but that's not going to happen. But the reality is that scientific literature is ultra conservative. That's like the sort of agreed impacts, and what we're seeing now from science and from the climate is a much more in many cases extreme impact from climate change. So I do think there's a lot of underpriced or miscalculated climate risk across banks, definitely related to sea level rise and extreme events. And I think that standards as a whole, like AWS, the Water Stewardship Standard, and others, can help bring a more holistic and systemic perspective to a lot of these institutions and sort of just awaken them to the needs to understand these risks more broadly. And that's the same goes for looking at resilience and even deep uncertainty.
Fantastic intervention, Nate. And we do need to get ready to turn to our final comments and our final speaker. But I'd like to synthesize a couple of the questions, really following up on Nate's intervention. And I'm going to ask in order Tom, Ignacio, and then Lila to respond. But this idea, we can think of it as maladaptation or potentially even greenwashing, and maybe if we were speaking potentially to negative motives, are there how do we see these emerging risks and potentially also the opportunity around water in particular, but resilience more broadly? And these are new bodies of knowledge, right? They're not necessarily pieces of information that our financial system or that kind of larger economic system is used to thinking about resilience or water as systemic threats or opportunities. So maybe Tom, if you could talk about it from your perspective, both at the development bank and developing member country perspective, that kind of partnership that development banks are trying to navigate. Ignacio, maybe you could talk about this kind of moving view of risk inside of Grupo Calamar, and how your sense of risk and opportunity is changing, maybe outside the institution as well as inside. And then Lila, I think maybe the last aspect for you would probably be around regulatory frameworks, right? Like that's often how we're trying to present our public values and try to rebalance some of these scales for the banking system as a whole. So if you could each keep to around like 60 to 90 seconds each. First you, Tom.
Yeah, thanks, John. Just in relation to that last point about the banking sector under estimating the risk. In the last webinar, you had the insurance industry on, and they're certainly taking it quite seriously and thinking about it. So it's interesting. There's that disconnect between a very major financial part of the global system of insurance, while the banking system may not be taking it that seriously. I think the main thing is convincing people of the need to invest in flexible adaptation, non-brittle solutions, and working at the policy level. And it's not just investment, it's really also institutions need to work together as ways they have never worked together before in terms of science, implementation, and finance. So I think bringing that all together is the real challenge. I mean, there's a lot of good knowledge out there and new knowledge every year, but how can we apply that? How can we get institutions in place and the finance in place and the political will to take it forward? I think it's a real challenge, and hopefully that's a role that development banks can help facilitate over.
Fantastic, Tom. Ignacio.
Yes, obviously for us, maladaptation is a concern. What I can say that now for us, the agricultural environmental analysis of each operation is more strict than the own financial analysis. Because in the Spanish agriculture is more probably that we do not support an investment because of we consider that there is not enough security in the water availability or in the evolution of the temperatures, that because of the financial situation of the farmer, of the company, because at the end of the day we think that and that's why we consider it's a very good approach, the approach of resilience, because we are not talking about the trade-off between economic and environmental sustainability, but we are talking about short and long-term economic viability of the operations. But obviously, there's always a risk of maladaptation. That's.
Punto. That was great, and
thank you.
And I think there was also a welcome note of passion and intensity in your statement too, that actually resilience is I think at the core of the mission that you're trying to represent. And that's, I think, a critical shift. It's probably not something you would have said maybe 5 or 10 years ago.
Sure.
But it's interesting that that's now you see it as aligned with your business practices. Lila, please.
Thank you. I think I'm echoing a few points which have already been made. But for these kind of types of investments, we first of all need the investments, the enabling conditions for these investments. So there's actions in water sector policies, but there's also that point of really having that coordination across ministries. So integrating water risks into broad economic planning, collaborating with ministries on creating national water resilience strategies as being really important. So I think that first of all is sort of the bedrock almost. But in terms of banking, there is a really important role for central banks and financial supervisors in making sure that these risks are being understood. So that could be in providing guidance to the banks in their system on how to assess and identify these risks. It could be also through macroprudential policy. You mentioned the stress test taken by the Federal Reserve, and in Europe, there's also been these activities. And these are really capacity building exercises as well. I mean, they're looking at capital adequacy, but they're also enabling financial institutions to really learn how to understand and how to assess and manage essentially these risks. So a really important role for central banks and financial supervisors in assessing water safety risks, I would say.
Fantastic. Thank you so much, Lila. I thank you, all the panelists. I'm going to hand over now to Josefina Maistu. She's an honorary lecturer at the University of Alcalá in Spain. She's also a good friend and for me, a mentor in this space. Despite my financial materiality tattoo, she's someone who I do not have a strong background in economics. I'm really more of a resilience person. And she's really guided my thinking in this space a lot. And I think she brings a lot of wisdom from the government side, from the UN, as well as her own research and practice. Josefina, the floor is yours.
Thank you very much, John, and thank you very much to all the speakers. I think it's been a very rich conversation. I think these webinars are increasing in terms of the substance, and I think we are really getting into some important matter here. I'm going to give you a little bit of my highlights. My job has been made easier because I think John has been, and Alex, have been doing some summaries along the way and getting our conversation going. But I would like to give you a little bit of my feeling of what has been said and what is important. I think we heard at the very beginning by John is that there are systemic vulnerabilities in the economy. They are new for the banking system. So our banking system is used to looking at the accounts of the projects. They are looking at how the financial viability of the projects, but how they are really looking at the projects in a bigger way and how the systemic vulnerabilities, that's something that they are not used to. This is new. We also heard he introduced to this idea of the shadow banking system versus the formal banking system and how we had two presentations on this, and that both have a very important role to play. I think we have a presentation on this idea of decentralized funding, which in a way is possible thanks to new technologies. And we heard how this decentralized funding could be a way, shadow funding, that in terms of that we heard at the very beginning, that it helps to improve access to vulnerable communities. So not be in a way in the hands of financial predators. We heard that concept, which I think is very important, and also to help new types of investments that are important to improve water resilience. So more ecosystem services investments. So there is this new area of work of decentralized funding that has a very important role to play in the future, and it is disruptive. Nathan told us that this type of funding has some specific characteristics, like is efficient and transparent, is a trustless system, which is quite different kind of concept that we are used to hearing. So we don't really need trust because it's so transparent that in a way everybody can look at what is happening. It helps provide this type of access to vulnerable communities, and importantly, it helps to monitor, verify, and report on a range of complex processes across the system with the support of new technologies. So I think that was something very eye-opening, this type of presentation, at least for me, and I think we were all left with interest to know more about that. We also heard about Cajamar. It's a more formal type of institution, but an institution that has helped create change in the context of the agriculture in Spain. And a change that now needs to be a little bit different because of the type of concept that John mentioned, that is the moving target, the sustainability as a moving target, that we went from improving efficiency, groundwater use, nitrate leaching to these new challenges that are facing, which I think probably what we heard about Spain is very common for other areas of the world as well. And interestingly, this role that this bank had, not only for lending, but also for generating knowledge and creating experimental stations to help farmers, to work with farmers. And I think this is something that is very new. We heard that from Ignacio that Cajamar is facing the issue of where water was not scarce and is becoming scarce, because that's the case. That is, the water availability in Spain is reducing, and also that we will see some times in which we will have a lot of water and we will have less water. So the farmers have to be able to plan, and the business operations and the lending is to consider these changes in the climate. I think one thing, I think the panel discussion, I think also helped, to bring in some new concepts, such as that even if there are economic risks from climate change, this not always mean financial risk for banks, because this really depends on the portfolio or diversification. But we also heard a lot in the conversations that the banks are not doing enough to consider climate change risks related to water. And that so they may be doing lending, or they may be having operations that are not really resilient in a financial sense. We also heard from Tom that there are changes and innovations in multilateral financing, which I thought it was very interesting. He made this point several times in terms of how multilaterals can help policy adaptation from governments, that the lending can be linked to this policy adaptation, both in terms of mitigation and resilience. And that was the concept I think John meant by working the supply and demand side of the multilaterals. So the multilaterals not only are generating new funds like the Green Fund, but also that they are working with governments to make sure that what they are actually doing with that money it helps their resilience. Including the nature-based solutions that I think was mentioned several times. I think we finally, the final points I think that my takeaways that from these conversations is that we heard the issue of standards, how water stewardship can help evaluate progress and success of projects. And we heard from different people in the panel that this is important. Whether we are using enough this type of standards, we don't know, but we really need to apply them more in the future and to monitor the evolution of the portfolio of the banks, And I think a final call, I think from both, I think John and Ignacio, that we need to hurry up. So this is not about the future, but it's about the now. So we need to move on this. I think I leave it to you there. This would be my takeaways. And John, I think I suppose I close the webinar. I would like to, with this type of key takeaways and conclusions, I would like to thank very much all the panelists and the keynote speakers. I would like to thank very much the organizer, Alex, John, Agua, for all the work that you are doing and helping all of us to really move on this very important and difficult issue that we all think are very relevant. Thank you very much to all. And you will be able to see the webinar again in the webpage of Agua. And I think the information is there on the screen. Thank you very much to all, and goodbye.